Yo, what's going on, guys? This video is only for entertainment purposes. I am not a financial advisor, nor I am a licensed professional. So if you're planning on investing, please take your time, do your own research, and invest at your own risk. Now, with that being said, welcome back to Prime Growth Investment. This is your boy Ali, and if you're new to this channel, hit the subscribe button and support my channel. So what's going on in the automotive world as of right now? There is a lack of microchips and semiconductor shortage, meaning that the production rate will be low as of right now and for the next weeks. But as an investor, you do not want to think of what's going on right now. You want to think about the future. So the stock prices are down. But as a millionaire, what you want to do is think about the future. So since the stock prices are down, you want to buy the dip. And once the production rate goes back to normal and may actually go up, the stock prices will go up and you're going to have maximum profit. So today I'm going to give you the my topics to buy since the production rate is low. So when the production rate goes up, you have maximum profit. So the first stock that I'm going to talk about will be Tesla, because Tesla is the leader in the EV market when it comes to production and sales. As of right now, Tesla at one point it was at $900, but as of right now it is priced at $650. But let's take a look at the future. Let's take a look at what analysts believe. So analysts believe that Tesla in the next 12 months, it might reach a high of $1,200. And this will give us a almost 100% profit. And if we take a look at the average is 621. Now 621 from where it is as of right now, that is very, very low, very, very low risk. So what we're thinking of is the future, and I am one of those people that believe Tesla will be in the $1,000 range or more by the end of this year. So this is a great opportunity to buy and just hold for a long term. Remember, this is what millionaires do. They buy the dip. They buy the dip and hold for a while until they maximize their profit. Now let's keep it rolling, ladies and gentlemen. The second stock that I'm going to talk about will be ChargePoint. ChargePoint at one point it was in $40 and above. As of right now is in $21.80. This is half of the price of where it was in the past 3 months. But this is nothing to worry about. Once again, we got to buy the dip and think of the future. Now, why should you buy ChargePoint? Let me tell you why. ChargePoint is being backed up by a top Tesla investor to go public. Now, this was before going public. And the reason why, it's because ChargePoint is a company that currently operates more than 115,000 charging points globally. It is actually the first company to go public that has charging stations throughout the world. And this is they're aiming to increase their charging stations to 2.5 million by 2025. And they have investors backed up from Daimler, BMW, Siemens, and they also have Tesla's largest outside stakeholder backing them up. This company is actually the number one. They are already the number one charging network in North America by a significant margin. This company holds a 73% market share of the network level 2 charging. And let's take a look about the future. Once again, we got to think about the future. So the global electric vehicle charging infrastructure market will be expected worth about $111 billion by 2028. Now let's take a look at what's going on right now. So this company, as of right now, they have 73% market share of the network level 2 charging. And in the future, in 2028, this market will be worth $111 billion. So, and not only that, the company is expanding their their company, and they are going to increase it to 2.5 million by 2025. They're going to have 2.5 million charging stations by 2025. So this is, in my opinion, the #1 charging station company for the electric vehicles, and this is my top pick. Now, #3 will be CCIV. And for those of you who watch my videos, you've heard me talk about CCIV numerous times. And the reason why, it's because I think about the future. At one point, CCIV reached $60, but it is currently at $23. This is almost a third of its original price, but I'm not worried. The reason why, it's because I think about the future. And let's take a look of what's going on with Lucid Motors. So Lucid Motors has sold out all of its 170,000 Air sedans as a total reservation that goes up to 8,000%. They are already fully reserved. This company has a Virgin that is going to be launched in the second half of 2021, and the price target is $169,000, and this is before the federal tax credits. And they announced on Twitter that their car, the Dream Edition, is now officially fully reserved. So this gives you a $84.5 million in potential Dream Edition sales. The car is not even out there, but people are loving it, and there's so many reservations, and there's actually a waiting list that's happening. So for those people who are not able to reserve their spot, they are waiting in a waiting list for the next. In case someone goes out, they go in their spot. So if we take a look right here, we can see these cars. The cars are Lucid going to produce. They have the Dream Edition, the Air Grand Touring, the Air Touring, and the Air Pure. And in order to reserve a spot, you have to pay money. The Dream Edition, the reservation cost $7,500, and the Air Grand Touring will be $1,000. Now, the reason why the Dream Edition is expensive, because one, it's very, very close in terms of production. It is coming out in 2021, second half. And when Lucid announced the deal with CCIV, they accumulated over 7,500 total vehicle reservation, and this is as of February 19. And this represents a total of 650 million potential future sales. So in my opinion, this is just crazy, because they don't even have a product out there in the market, but people are loving what they are seeing with this company, and they are reserving a spot in order to purchase the first car out there in the market. So this is it, ladies and gentlemen. This is my opinion. I think this is a great time to buy the dip and think of the future, because once the production rate goes back to normal, these stocks are going to go up and we're going to have a maximum profit. And if you enjoyed this video, please leave a like and hit the subscribe button.